A non-resident Indian acquired a share of Indian company A Limited on 1st January 2009 for 1 lakh in a foreign currency. These shares are sold for him at 1st January 2024 for 3 lakhs rupees. So, long term capital gain. He invests 3 lakhs rupees on his shares on 31st 24. Within 3 years, these shares are sold by him on 3624. So, invested and sold for 350,000. Discuss the tax implication. So, 1 lakh he sold for 3 lakhs. That is totally exempted. But when he sold for 350,000, the 50,000 goes to short term capital gain. That 3 lakhs which is sold will be applicable for long term capital gain for that 2 lakhs rupees at 10 percentage. So sale consideration 3 lakhs, cost of acquisition 1 lakhs, 2 lakhs capital gain. So exemption on 115 is 2 lakhs. So shall exempted for capital gain. Exempted for 2 lakhs, the exemption on 115. The capital gain of assessment year 2025, the long term capital gain is 2 lakhs, which exempted 25 because tax this year. Exempted will be taxable in this year, and short term capital is also taxable in this. Correct. Yes. Mr. John, non-resident, purchased unlisted shares of Indian company at a cost of 70,000 on 1st July 2010 in a foreign currency. Mr. sold the same share consideration 250,000 1st August 2023. An expenditure incurred wholly and exclusively in connection with the transfer is 10,000 rupees. Okay. Compute the taxable capital gain if he deposit the specified deposit 1,50,000 out of sale consideration. Ignore the effect of first provisional action 48. So 2,50,000 minus 10, 2,40,000, 2,40,000 minus 70,000, 1,70,000. Out of 1,70,000, 1,50,000 is deposit. Capital gain is 1,50,000 divided by 2,50,000. Net consideration 2,40,000. So out of that capital gain will be 1,40,000. So 1,40,000. Okay, 2,70,000 70,000. So 1,70,000. Acceptation is 1,70,000 into 1,50,000 divided by 2,40,000. So taxable capital is 63,750 character. Option not to file income tax return section 115G. The non-resident Indian need not furnish a return of income under section 131 for satisfying the following two conditions. His total income consists of only the investment income and the income by way of long-term capital gain or both, and the tax deduction source has been deducted from such income. The investment income and income by way of long-term capital gain or both. Okay. Continuance of benefit after the non-resident became resident. Where a person who is a NRI, non-resident Indian, in a previous year become accessible as a resident in any subsequent year, then he may furnish a declaration in writing along with the return of income section 139 for the year so in which he is so accessible. A declaration shall be in the effort of provision of the chapter shall be continued to apply to him respect of the investment income derived from the foreign exchange asset being a debenture, deposit, being a security of central exchange, secretary government, and any other notified asset as per the specified in section 115. If he does not, he does so the provision of the chapter shall continue to apply to him in relation to such income for the assessment year and every subsequent year until the transfer convertible into money of such asset. Okay. Option to opt out of Chapter 12A, Section 115I. The section gives option to a non-resident Indian to elect that he should not be governed by the special provision of Chapter 12A for any particular assessment year by furnishing his return of income for the assessment year under Section 139, declaring therein the provision of Chapter 12A shall not apply to him for the assessment year in the case where such of the option is excised by the non-resident Indian. The total income from the assessment year would be chargeable to tax under the general provision of this Act. So, yeah. So, quick recap: naming a foreign exchange as an FEA, specified as a acquire or purchase, subscribe to a convertible foreign exchange. Specified asset can be Shares in an Indian company, debentures issued by the government, Indian company or other than private company, deposit with the Indian company other than private company, any security of central government, other assets notified by the central government. Special provision relating to certain incomes of non-resident individual being a citizen of India and purpose of Indian also. So investment income from foreign investment as foreign exchange as an investment asset. Long-term capital gain relating to foreign exchange asset paying to long-term capital gain. Long-term capital gain on asset other than specified asset, other income. So rate is foreign exchange 20%, long-term capital 10%, long-term capital on asset other than specified asset 20%, other income normal tax rate. Deduction for the expenses allowed, not applicable. Allowable, however, benefit of integration is not available. So reduction is available, indexation of costs is also available, but now it's not available. Other reduction other than chapter 6A, not allowed, not allowed, not allowed, but in normal case allowed. Exemption under section 115F allowed only in the case of long-term capital relating to the foreign exchange asset being a long-term capital gain. So if the entire net consideration is involved in a specific asset, new asset, the entire capital gain will be exempted. If part of the net consideration investment is a specific asset, the proportionate capital gain will be exempted. In the case of a new asset converted into money within 3 years acquisition, exempt of capital gain deemed to be income chargeable to tax in the age of transfer. So determination of tax in certain special cases, section 115A, section 112, section 112A have already been discussed in detail in the section chapter 4, capital gains in the module 1. The special provision contained in other section under chapter 12 are discussed thereafter. The social provision of the computation of tax on the income by way of royalty, fees for technical services, section special provision for computation tax on the income by way of royalty, fees, technical service, interest, etc. Section 115A. Interest on dividend. In tax on dividend, interest in case of non-corporate, non-resident, and foreign companies, where total income of the foreign company or a non-corporate, non-resident includes of as any income by way of rate tax of rate. Dividend received by unit of IFSC, reference section 80LA, chapter 1A, 10%. Dividend and other mentioned 20%, rate of reduction tax. So, determine tax uncertainties. Interest received by the government on Indian concern, money borrowed, or debt incurred by the government in Indian concern in the foreign currency other than 3 and 4 mentioned below 20%. Interest received from infrastructure development referred under 5%. Interest received in section 115 LC received from from an Indian company or business trust. In respect of money is borrowed by Indian company or business trust or in foreign currency from source outside India under the loan agreement between 1st July 2012 to 30th June 2023 or by way of issue of long-term infrastructure bond between 1st July 2012 to 30th September 2014 by way of issue of long-term bonds including long-term infrastructure bond between 1st October 2014 and 30th June 2023 is 5%. In the case of money borrowed from a source outside India by way of renew rupee denomination bond on before 30 June 2023 is 5%. In respect of money borrowed by a source of outside India by a way of long-term bond or a rupee denomination bond between 1st April 2022 to 30 June 2023, which is listed only on recognized stock exchange okay in IFSC 4%. 4%. In respect of money borrowed from a source outside India by way of long-term bonds or rupee denomination bond after 1st July 2023, which is listed only in the recognized stock exchange located in IFSC 9%. Interest on foreign institutional investor on qualified foreign investor payable between 1st June 2023 and 30 June 2023 on investment made in Indian denomination bond of an Indian company, government security payable between 1st April 2020 to 30th June 2023 on investment made in municipality debt security 5%. Distributed income referred under section 194 LBA. Subparagraph 2. Interest income of a business trust from the special purpose vehicle distributed by the business trust in its own non-resident unit holder. 3%. Dividend income of a business trust received or receivable by a special purpose vehicle exists in the option of pay tax at a consideration rate and a section 115 BAA distributed by the business trust to a non-resident holder. However, in the special purpose vehicle has not exercised an option to pay tax at the concessional rate of section 115 BAA. Dividend income would be exempt in the hands of shareholder. Income received with respect of the unit purchase in foreign currency of the mutual fund specified in section 1023T and Unit Trust of India 20% in tax on royalties, fees for technical service in case of non-resident. When a total income of foreign company or non-corporate non-resident include any income by way of royalty or fees for technical services other than the income received in the section 44 applicable rate of tax received from the government in pursuant to an agreement made by the non-resident and a foreign company with the government. 20% of royalty or FTAs. However, DTAA provision for the rate of the lower than 20%, then the provision of DTA would apply. Received from an Indian concern in pursuance to an agreement made by the non-resident foreign company with the Indian concern. An agreement is approved by the government, central government, where it is related to industrial policy of government India. The agreement is according to the policy. Important point: special rates of tax is applicable on the above mentioned incomes. The remaining income of the assessee will be chargeable to tax at the normal rate applicable to the assessee. No reduction in respect of expenditure or allowance shall be allowed to the assessee under section 28, 44C and section 57 in computing the above income. Deduction under Chapter 6A is not available in respect of dividend or interest referred to one above, and the special rate of tax is applicable to the above mentioned income. The remaining income on the assessee will be chargeable in the normal rates. No reduction in respect of any expenditure or allowance shall be allowed on the assessee under section 28 to 44C and 57 computation of the above income. Deduction under Chapter 6A is not available in respect of the dividend and interest referred to one above. However, the condition would not apply to deduction allowed to the Unit of International Financial Service Center (IFSC) under Section 80 LA. That is, the unit of IFSC can claim reduction. Claim reduction under Section 80 LA against the dividend or interest received in Section 1 above. It shall not be necessary for the assessee to furnish a return of income if the following conditions satisfy. The total income consists of only the interest or a dividend income referred to the one above or royalty or fees of technical services referred to clause 2 and above, and the tax deducted. So it's being deducted for this purpose, and then the rate of such a deduction is not less than 20%. Quick recap: tax treatment. Tax treatment on royalty fees and technical service are received from the government of Indian concern in pursuit of overcome. It is right. The property or contract effectively connected to PE, permanent establishment or fixed place of profession, PPF, fixed place of profession in India. If yes, a royalty and FTS fixed FTS would be computed as per 44DA under the head business BGBP as per the provision of Income Tax Act 1961, normal tax of applying. Audit and accounts, reduction of expenditure. The books to be accounted and maintained as per section 44A. Books of account to be audited and audit of report to be furnished 1 month prior to the date of return of income. Reduction of expenditure. No reduction in respect of expenses is not incurred wholly exclusively relating to the permanent expenditure. The respect of expenses not incurred wholly exclusively relating to the permanent establishment fixed base of profession in India. No reduction in respect of amount paid other than the reimbursement of the actual expenses of PE and the place of profession to the head office. The rate of tax at 20% under section 115A on a gross royalty or FTS would apply. No reduction of any of the expenditure allowed under section 28 to 44C or section 157. Reduction in the chapter 6A permission. Exempted from the filling the return section 131, the tax has been deducted 20%. If tax has been deducted, the rate of loss on 20% is available to the beneficiary for one TTA, and no exemption would be available for the filling the return of income. Special provision for computing tax on the income from the unit purchase of foreign currency or a capital gain arising from the transfer of the aforesaid funds. Section 115 AB. The special provision of computing tax on the income from the unit of purchase in the foreign currency and capital gain arising from the transfer of the case of the above sections. The total income of the overseas financial organization includes following incomes, namely income received in respect of unit purchase in foreign currency, income received in respect of units purchase in foreign currency by way of long-term capital gain arising the transfer of unit of the mutual fund specified in section 1023T or unit of UTI purchase in foreign currency. And the income tax payable shall be aggregate as the following: 10% of the income referred above, or the amount of income tax which the offshore fund would have been chargeable has its total income been reduced to the amount of long-term capital gain, the income received, and referred to the above. Important points. The benefit of taxation is shall not be available in the computation of total in the total tax total long-term capital gain. No reduction shall be allowed to the assessee under the section 28 to 44C or section 57 clause 1 clause 3 under the chapter 6A in computing the income, where the gross total income of the overseas financial organization consists of other incomes, then the deductions of chapter 6A will be available in respect of other incomes. The normal provision of the income tax in 1961 will be applicable for the computation of the other income. Overseas financial organization means a funds, institution, associate or body were incorporated nor established under the laws of the country outside India, which has entered into an arrangement of investment in India with a public sector bank or public financial institution or mutual fund specified under section 1023D. Such arrangement should be approved by the SEBI, Securities and Exchange Board of India. It may be noted that long-term capital gain up to 1 lakh on the units of unit-oriented fund would be exempted. A long-term capital gain exceeding 1 lakh shall be taxable at 10% in section 112A, provided security taxation tax will be paid on sale of such units. It may be noted that the short-term capital gain and unity of equity-oriented funds are taxable at 15% under section 11A, provided that security taxation tax will be paid on the sale of such unit. So, it may be noted that the capital gain on the transfer of a unit of specified mutual funds would not more than 35% of total proceed to invest in the equity shares of a domestic company short-term capital gain. It may note that the capital gain on transfer of a unit of specific mutual funds are not more than 35% of the total process invest in the equity shares of domestic company as a short-term capital gain under section 50. Special provision of computational tax on the income from a bonds or global domestic recipient purchase in foreign currency or capital gain arising from this transfer section 115 BC. Eligible assessee and special rates of tax. According to section 115 AC, where the total income of assessee being a non-resident include income by way of interest on the bond of Indian company issued in accordance with such a scheme of central government may notified on the bonds of public sector or companies owned by the government or purchased by him in the foreign currency, or income by way of dividend on the global depositories GDR. Issuance according to the schemes of central government may be specified against the initial issue of shares of an Indian company and purchased by him in a foreign currency through an approval intermediate, or issue against the shares of public sector companies sold by the government and purchased by him in a foreign currency through an approved intermediate. Issue and reissue according to the schemes of central government and specify against the existing shares of Indian company purchased by him in a foreign currency through approved intermediate, or issued by a long-term capital gain or arising on the transfer of above bonds of a GDR. Then the income tax will be chargeable to rate of 10% of the above income. Deduction not allowed section 115 AC. By the goods of total income of a non-resident consists only the aforesaid interest. Dividend income referred under clause A and B 1. No reduction shall be allowed under section 28 or 44C or section 57 1 or 57 3 of the chapter 6A. Reduction chapter 6A also not available against a long-term capital gain arising from the transfer of GDR. When the gross total income of a non-resident consists in incomes other than interest, the independent long-term capital gain ABC above, then the deduction chapter 6 will be available in the respect of the deduction. Non-availability of indexation benefit or computation of capital gain in the foreign currency. Section 115 AC Class 3. Indexation benefit of computation of capital gain in a foreign currency shall not be available for the computation of long-term capital gain arising out of transfer of long-term capital assets being bonds of GD or global deposit receipt. Filling the return of income not requested. Section 115 AC Clause 4. It shall not necessary for a non-resident to furnish return under Section 139(1). Return of income if the total income is respect of which is assessed under Section Act during the previous year consists only the aforesaid interest or aforesaid dividend income or the tax deducted source under the Chapter 18B has been deducted for the such income. Concessional tax treatment and the global deposit receipt bond acquired in the course of amalgamation section 115 AC clause 5. When assessee acquire a global deposit receipt and a bond in an amalgamation or resulting company by virtue of holding global deposit receipt or bonds in the amalgamation or demerger company in accordance with the provision of 115 AC clause 1, the concession tax treatment would not apply in case of GDPR amounts. Maintain the global deposit receipt. The global deposit receipt means any instrument in the form of deposit receipt or certificate by various name called creating overseas depository bank outside India in an IFSC and issued investor against issue. Ordinary shares of issuance company being a company listed or recognized stock exchange in India. Foreign currency convertible bond of issuer company. Ordinary shares of a issuing company being a company incorporated outside India. If such deposit receipt or certificate is listed or treated under such IFSC. Special provision for the computation of taxes on the income of specified fund or a foreign institution or an investor or the securities or capital gain arising from that transfer section 115 AD. Special rate tax. A total income of specified fund or a foreign investment investor including the income referred to section clause 2, the same will be subject to tax under the mentioned above. Income rate of tax. Income received with respect of securities other than income of units specific section 115 AB or units of mutual fund section 1023D or UUTI. Interest referred section 194 LD. Other than such as 20% case of FFE and 10% case of receipt fund. Interest received 194 LD 5%. 100 income by way of short-term capital gain arising from transfer of security other than short-term capital gain section 11A 30%. Income by way of short-term capital gain section 11A 15%. Income by way of long-term capital gain arising from the transfer of security other than long-term capital gain section 115 10%. Income by way of long-term capital gains under section 112A exceeding 1 lakh 10%. Other than the income of specified fund section F1A normal rates of tax. In the case of specified fund, the provision of the section would apply only to the extent of income that is attributable to unit held by the non-resident, not being in permanent establishment non-resident in India, calculated to the prescribed manner. The specified funds has to furnish an annual statement or income eligible for concession, taxation, and electronically and a digital signature before the date of 131, which duly verified the manner of indicate therein. Income on a specified fund attributed to the unit held by a non-resident not being in permanent establishment non-resident in India would not be eligible for tax rate specified in section 115 AD unless the furnishes the annual return of income like eligible for as concession tax on or before the due date. Notification number 64/24 dated 16th June 2022. Where a specific fund is an investment division of an offshore banking unit, the provision of the section would apply to the extent of the income that is attributable to the investment division of the offshore banking unit. Guaranteed certificate of registration in category 1 foreign portfolio investor under section SEBI foreign portfolio investor regulation 2019 made under the SEBI Act 1992. A fulfillment of the prescribed condition including maintenance of separate account for its investment division calculated in prescribed manner. The eligible enforcement division has to furnish an annual statement of income eligible for the taxation like 11580 in the prescribed form electronically under the digital signature on or before the due date of section 131.1. The income of the eligible investment division would not be eligible for the tax rate specified in section 11580 unless the eligible investment division furnishes an annual statement of eligible for taxation like 11580 on or before the due date 645/64/2022 dated 16 June 22. Surcharge. Under the normal provision of the Act, the surcharge applicable on the tax on total income of individual, association of person, body of individual, artificial judicial person having any income under section 11580 and such person has settled out of the default tax regime after to pay tax on the normal provision of the Act for the payment of advance tax transaction for an assessment on the 45. Particulars, rate of surcharge, example, components of total income, application of rate of tax. Total income is greater than 50 lakhs but not greater than 1 crore. 10% surcharge. Example, capital gain on the securities referred to be section 115AD 60 lakhs other than 35 lakhs. Other than 35 lakhs. Surcharge would be given 10% on the total income compared on the total income 95 lakhs. 65 plus 35 95. Income is greater than 1 crore but less than 2 crores, surcharge is 15 percentage, and the capital gain of security offered under section 115AD is 1.2 crores. Other income total tax. The surcharge will be calculated at 15%, that is 1.8 crores of total income. Total income excluding dividend, short-term capital gain, long-term capital gain on securities that are afford under section 115AD. 115AD is greater than 2 crores but less than 5 crores. 25%. Dividend is 1.0 crores. Capital gain on the securities referred under section 115AD is 1.05 crores. Other income is 2.1 crores. Surcharge shall be levied 15% on the dividend 1.5 crores and capital gain and 1.5 crores and referred to the section 115 25%, 15%, 25% at slab rate and 25% 2.1 crores total income. Total income is excluding dividend, short-term capital gain such as is greater than 5 crores, 37% surcharge. And the rate of surcharge on the income tax payable on dividend on portion of the income tax is 15%, not exceeding 15%. So the dividend is 1.5 crores. Capital gain on a securities reference in 115AD 1 class B 1.7 crores and other income is 6 crores. Surcharge should be levied in 15% on total income, leviable on a dividend of 1.5 crores and capital gain 1.7 crores referred to section 115 and 37% of total income, 15%, 25% and 37%. So 27% in case of computer other income. Other income. Total income, including dividend, short-term capital gain, security 115 is greater than 2 crore in case of non-covered in class 3 and 4. 15% dividend income is 1.5%. Capital gains on the securities referred to 115 is 1.1. Other income is 1.6. Statutory dividend 1.5%. Surcharge and health and education section will not be applicable in specified fund respect of the income received from the securities referred to section 11580 1 and 1. Now, in the case of default tax regime, maximum rate of surcharge is 25% instead of 27%. In the case of UOP consists of only companies and members, a rate of surcharge is 10%, greater than 15 lakhs, but less than 1 crore 15%. No reduction is allowed under section 11580, where the gross total income of the specified fund, or a fund foreign institutional investor comprises only the aforesaid interest, dividend income from securities. No reduction shall be allowed. G to it under section 28 to 44C or from section 56(1) or 57(3) under chapter 6A. Reduction under section chapter 6A is also not allowed in the case of short-term capital gain or long-term capital gain arising on the transfer of securities, where the gross total income of the specified fund or foreign investment investor contains the income other than the income under section A to F tax and table under clause 1. Then the deduction under chapter 6 will be applicable, available in respect of other income. However, the permission of AMT under section 115JE will not apply in specific fund. First and second provision to respect of 48 shall not apply. 115 is the benefit of computation of capital gain in foreign currency and benefit of integration would not be available for the computation of capital gain arising to transfer of securities. Meaning of certain terms. Investment division of aforesaid banking unit. An investment division of a banking unit of a non-resident located in IFSC. There are four under Section 80 LA Class 1 and which is commences operation on the 31st March 24. Specific fund. A fund established or incorporated in India, a form of trust or a company or LLP and body corporate, which has to granted a certificate of registration with Category 3 an alternative investment fund and regulated as SEBI alternative investment fund under the SEBI Act and Authority of 2019, where it is located in any IFSC, and which all the unit is held by the non-resident other than the unit held by a sponsor or a manager, and whether the condition would not apply where any of the unit holder being a non-resident, being the previous year where the unit or a unit are issued becoming a resident under section 1 or 1 or any previous year subsequent to this year. The aggregate value of number of units hold and section resident unit holder holders do not exceed 5% of total unit issued on the fulfill condition in the prescribed manner. The investment division banking unit which has been granted certification of category 1 foreign portfolio investment under the SEBI foreign portfolio investment regulation was 19 and made under the SEBI Act 1982, which is commenced in the operation now before 31st March 24 and fulfills condition including the maintenance of separate account for the investment division as per prescribed. The special provision for computing tax on non-resident sportsman or sportsman association. The eligible associate, the special rate of tax bear a total income of associate referred in the clause 2, including income referred in the clause 3, column 3 of the table. Under the income would be aggregate tax at 20%. Sportsman, including an athlete who is not a citizen of India and not a non-resident. Any income received or receivable by a particular participation in India or in any game other than the game of winning were from a taxable under section 115 BB, being a winning from crossword puzzle, racing including horse race or card game, other games or any sort of gambling or betting or sport, advertisement or contribution of article relating to any game or sports in the Indian newspaper, magazine, journal, and non-resident sport associated of institution. Any amount of guarantee to be paid or payable to such association or institution relating to any game other than the game of winning were from a taxable under the section 115 BB or a sports played in London. Entertainer who is not a citizen of India and is not a resident, and income receivable on the performance of India. Deduction expenditure is not possible. No deduction respect of any expenditure allowance shall be allowed under the provision of the Act in computation of income referred to Clause A, Clause B, or Clause D in table below. Filling of return of income is not required. The assessee is not required to furnish any under section 131 return if the total income in respect of which assessee under the act during the previous year consists of only the income referred to clause A, clause B, clause C. The tax deducted source one under the provision of chapter 16B has been deducted for the action of from such income.